Hey there, I'm Justin Spicer from the Ohio State Legal Services Association, and I'm here with Michael Edwards, staff attorney with the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Luke Menak, staff attorney with the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. Today we're continuing our self-employment series, talking about the Schedule C. Feel free to leave a comment or question, and we'll answer whatever we can. Luke, we've talked about the Schedule C before in previous Facebook Live segments. Can you give our viewers a quick overview of what the Schedule C is?
Of course. So the Schedule C is a federal tax form for taxpayers to report the money they earn from their business and the type of expenses they had to pay to run the business. As our viewers may remember from past videos, taxpayers will use the Schedule C to report their net income, their net profit or net loss on their 1040 tax return. A net profit or net loss is the taxpayer's income minus their business expenses.
Michael, what information do taxpayers need to fill out a Schedule C?
The taxpayer will need their income information for the year, which would include bank statements, register receipts, balance sheets, etc., as well as the receipts for any business expenses. If the taxpayer used a vehicle for the business, they would also need any mileage or other vehicle records.
Luke, for 2022, the Schedule C has 5 parts for reporting income and expenses. Does the taxpayer need to complete each section?
Maybe. So it depends on the taxpayer's business if they need to complete all the items in each section. All taxpayers, though, will complete at least Part 1 and Part 2. In Part 1, the taxpayer lists all the income from their business and calculates their gross income, which is the total income a person makes before any taxes or deductions. For Part 2, the taxpayer adds up all of their expenses and subtracts them from their gross income to figure out the net profit or loss. This is the number they report on their tax return on line 10. If the taxpayer used a vehicle for their business, they would need to complete Part 4 to figure out the mileage deduction for the tax year. Part 3 is used to figure out the cost of any items sold, so if you have inventory. If that applies to your business, you will need to complete that section. If you have more expenses that were not specifically listed in Part 2, you can claim them in Part 5. In fact, line 27A in Part 2 is the total of the expenses listed in Part 5. An example of an other expense could be your business startup cost. And for 2022, you can choose to deduct up to $5,000 of certain business startup costs.
So, Michael, if the taxpayer earns money delivering food with services like Uber Eats or DoorDash, do they need to complete a Schedule C?
Yes, DoorDash, Uber, Grubhub, etc., will send the taxpayer a Form 1099 NEC. The taxpayer will report this income on a Schedule C. They'll also need to include all business-related expenses, such as mileage.
And Luke, if people have more questions, what resources are available?
So the IRS has created a few guides and publications to help taxpayers for this topic. First, taxpayers can go to irs.gov/pub 334 for publication 334, which is a tax guide for small business. You can also go to irs.gov/pub 463 for publication 463, which focuses on travel, gift, and car expenses. Finally, people can go to irs.gov/pub 535 for publication 535, which explains business expenses.
Great. Thanks, Luke, and thanks, Michael. Thanks, everyone, for listening. As a reminder, this is the 8th in our series of videos on self-employment. Join us next time on February 17th when we talk about refund anticipation loans and tips for choosing a tax preparer. And remember, this segment and all the others in our Tax Chat series are available on our Facebook page. Thanks, everyone, and we'll see you next time.